Money is considered one of the most important inventions in the entire history of human civilization and society. Every day, billions of people use money to buy food, pay bills, travel, and survive in modern life. Today, money exists in many forms, including paper notes, coins, bank cards, online payments, and digital currencies. However, thousands of years ago, human societies functioned completely differently without the modern financial systems people know today. The story of money is deeply connected to the story of human civilization, trade, and economic development over time. As societies evolved and populations increased, trade became more complicated and required better systems of exchange. Over centuries, money transformed from simple barter systems into coins, paper currency, banks, and advanced digital transactions. Understanding the evolution of money helps people understand how economies and civilizations developed throughout human history. Long before coins, banks, or paper notes existed, early humans survived mainly through barter systems and direct exchanges. Barter simply means exchanging one good or service directly for another without using any form of money. For example, a farmer could trade wheat for fish, while a hunter exchanged animal skins for useful tools. In small communities, barter worked reasonably well because people depended heavily on one another for survival and trade. If someone needed an item, they traded whatever goods or services they already possessed at that moment. However, barter systems created many serious challenges and limitations as societies became larger and more advanced economically. One major problem was the double coincidence of wants faced during trade between two different individuals. This meant both people had to want what the other person offered at exactly the same time. Imagine a farmer with rice needing shoes while the shoemaker had absolutely no interest in rice at all. In such situations, trade became slow, difficult, and extremely inconvenient for people trying to exchange goods efficiently. Another problem involved determining fair value between different products and services within barter-based economies and societies. People constantly struggled deciding how many chickens should equal one goat or how much grain matched certain tools. Without standardized pricing systems, many exchanges became unfair, confusing, and difficult to negotiate between traders and communities. Barter also created major storage and transportation problems for individuals and growing civilizations throughout ancient human history. Some products spoiled quickly while others were heavy, inconvenient, or difficult to transport long distances safely and efficiently. Carrying livestock, crops, or bulky goods for trade often became impractical for merchants and ordinary workers alike. As civilizations expanded and trade increased, societies searched for more reliable and efficient systems of economic exchange. This eventually led to the rise of commodity money in many ancient societies around the world and regions. Commodity money refers to valuable items widely accepted and used for trade within different civilizations and communities. Different societies used different commodities including salt, cattle, shells, beads, rice, tea, tobacco, and even large stones. These commodities gained value because large groups of people trusted and accepted them during commercial exchanges and trade. Salt became especially valuable because it preserved food and was considered essential for survival in ancient civilizations. In fact, the word salary comes from the Latin term connected to payments Roman soldiers received for salt. Cowrie shells became widely used as currency across Africa, Asia, and Pacific societies for many centuries historically. Their rarity, portability, and durability made them useful and trusted forms of exchange within many ancient economies. However, commodity money still created problems related to transportation, storage, division, and maintaining stable long-term value consistently. Some commodities lost value over time, while others remained difficult to protect or divide into smaller portions conveniently. Eventually, civilizations began using precious metals like gold and silver as more reliable forms of money and wealth. Precious metals offered several major advantages that made them highly suitable for trade and economic systems globally. Gold and silver were durable, portable, divisible, rare, and widely admired for their beauty and social prestige. Ancient civilizations including Egypt, Mesopotamia, Greece, Rome, China, and India used precious metals extensively for commerce. Initially, metal currency was traded mainly according to weight rather than standardized official coin systems and designs. However, weighing metals during every transaction proved slow, inconsistent, and inconvenient for merchants and expanding economies worldwide. To solve these problems, rulers and governments eventually introduced standardized coins with official markings and guaranteed value. Historians believe the first official coins appeared in the ancient kingdom of Lydia around 600 BCE historically. Lydia was located in the region known today as modern Turkey within the ancient Mediterranean world and trade networks. Coins revolutionized trade because they guaranteed weight, value, and trust through official state authority and recognition. Merchants no longer needed to weigh metal constantly during every exchange or commercial transaction between different individuals. Ancient Greek and Roman civilizations greatly expanded coin usage throughout their growing empires and trade territories internationally. Coins often displayed rulers, religious symbols, military victories, or important cultural images representing political and social authority. Currency became not only an economic tool but also a symbol of national identity and government power worldwide. The Roman Empire developed sophisticated monetary systems supporting trade across massive territories stretching across Europe and beyond. Roman roads, marketplaces, ports, and coin circulation strengthened economic growth and communication throughout the empire successfully. In ancient China, another revolutionary financial innovation eventually appeared that transformed economic systems permanently and globally. Chinese merchants found carrying heavy metal coins inconvenient during long-distance travel and commercial trading activities regularly. During the Tang and Song dynasties, traders began using paper certificates representing stored metal currency and wealth. Eventually, Chinese governments officially issued paper money backed by precious metals or state authority and economic trust. Paper money spread slowly because many societies distrusted it compared to traditional gold and silver currencies initially. People trusted precious metals more because gold and silver possessed visible physical value and long historical acceptance globally. Despite early distrust, paper currency offered many advantages that transformed financial systems and global trade significantly over time. Paper money was lightweight, portable, easier to transport, and suitable for larger economic systems and international commerce. Governments soon realized paper currency provided greater control over economies, taxation, and large-scale financial management nationally. Banking systems also became increasingly important as trade networks expanded across regions and civilizations throughout human history. Early forms of banking existed in ancient Mesopotamia, Greece, Rome, and several other advanced ancient societies worldwide. However, modern banking expanded dramatically during medieval and Renaissance Europe because international trade grew rapidly and consistently. Merchants needed secure places to store wealth and reliable methods for transferring money safely across long distances. Banks provided loans, protected deposits, facilitated trade, and supported growing commercial activities between cities and nations globally. Italian cities such as Venice and Florence became famous financial centers during the European Renaissance period historically. Wealthy banking families financed trade, exploration, governments, military campaigns, and cultural development across Europe and beyond significantly. The rise of global trade during the Age of Exploration transformed money systems and economic relationships dramatically worldwide. European powers expanded trade networks connecting Asia, Africa, Europe, and the Americas through large commercial empires globally. Gold, silver, spices, and goods flowed between continents on massive scales never experienced previously in human civilization. As economies became increasingly complex, nations developed centralized monetary systems controlled by governments and national institutions officially. Governments established national currencies and central banks to regulate economic activity and maintain financial stability over time. One important historical development was the introduction of the gold standard within global financial systems and economies. Under the gold standard, paper money was directly linked to specific amounts of physical gold reserves nationally. Governments promised citizens they could exchange paper currency for gold whenever they desired under this financial arrangement. The gold standard increased public trust because currencies possessed clear physical backing through valuable precious metal reserves. Many powerful countries adopted versions of the gold standard during the 19th and early 20th centuries internationally. However, maintaining gold-backed currencies became extremely difficult during wars, crises, and periods of economic instability worldwide historically. Governments sometimes printed more money than available gold reserves could realistically support within their economies and banking systems. During the 20th century, most nations gradually abandoned the gold standard and adopted modern fiat currency systems instead. Fiat money means currency gains value mainly because governments declare it legal tender accepted throughout national economies officially. Modern paper notes and coins possess very little intrinsic value compared to the goods and services they purchase. A $100 bill costs very little physically, yet society accepts it because people trust the economic system collectively. Trust has always remained one of the most important foundations of money throughout human economic history and development. Whether societies used shells, metals, paper notes, or digital payments, money worked only because people trusted its value. The invention of electronic banking transformed financial systems dramatically during the late 20th century across developed countries worldwide. Computers allowed banks to store, process, and transfer money digitally instead of relying completely on physical cash anymore. Credit cards became extremely popular because they allowed consumers to buy products without carrying large amounts of money. Debit cards connected directly to personal bank accounts, making transactions faster, easier, and more secure for consumers globally. Automated teller machines, commonly called ATMs, changed banking convenience significantly for millions of people around the world. Customers no longer needed to visit banks only during limited business hours to access their financial resources conveniently. Financial services became available almost any time through electronic systems and advanced banking technology operating across modern economies globally. The Internet later revolutionized financial systems completely by allowing people to manage money directly from their homes easily. Online banking enabled users to transfer funds, pay bills, and monitor accounts without visiting physical bank branches anymore. E-commerce platforms created entirely new forms of global digital commerce and online consumer purchasing behavior internationally and rapidly. People could suddenly purchase products from different countries without touching physical cash or visiting traditional marketplaces directly anymore. Mobile payment systems accelerated this transformation further by turning smartphones into powerful financial tools for everyday transactions globally. Today, many people send money instantly through apps, digital wallets, and online payment platforms using mobile technology daily. In countries like China, mobile payment systems became extremely common for shopping, transportation, and restaurant purchases nationwide. Many citizens now rely heavily on QR codes and smartphone applications instead of carrying physical cash regularly anymore. Meanwhile, younger generations increasingly view digital transactions as more natural and convenient than physical cash usage traditionally today. Many young people growing up with smartphones rarely carry cash because digital financial systems dominate their everyday economic interactions. Social media influencers now discuss investing, cryptocurrency, entrepreneurship, and financial independence regularly through online platforms and communities worldwide. Financial education became more accessible online, although misinformation and scams also spread quickly through digital spaces and networks. Economic inequality remains one of the biggest global challenges connected to financial systems and money distribution throughout modern society. While technology creates financial opportunities, millions of people still lack stable access to proper banking services internationally today. In some developing regions, mobile banking improved financial inclusion significantly for populations previously excluded from traditional banking systems. People without bank accounts can now send, receive, and store money safely using mobile phones and digital platforms. The future of money may involve technologies humanity cannot fully predict or understand completely at the present moment yet. Biometric payments, AI-managed finance, virtual economies, and advanced blockchain systems may reshape financial life dramatically in future generations. Some experts believe physical cash could eventually disappear almost entirely from modern societies and developed economies worldwide eventually. Others strongly argue cash will remain important for privacy, independence, emergency situations, and freedom from technological dependence globally always. History clearly demonstrates that money constantly evolves alongside changes in civilization, trade, technology, and economic development throughout centuries consistently. Every major economic transformation changes how people exchange goods, store value, and interact financially within societies globally over time. Despite technological changes, the core purpose of money remains surprisingly similar throughout human history and economic development consistently. Money helps facilitate trade, store value, measure economic worth, and support interactions between individuals and businesses efficiently worldwide. Money is not simply paper, metal, or digital numbers appearing on electronic screens within banking systems globally and daily. It actually represents trust, cooperation, economic stability, and shared belief among members of society and financial institutions internationally. Without trust, money loses meaning because people stop accepting it during trade and economic exchanges between communities eventually. Without organized exchange systems, economies struggle to function efficiently and societies face major commercial difficulties and instability rapidly. Without adaptation, financial systems eventually fail to survive changing technological, political, and economic conditions throughout history and civilizations. From ancient barter trades between farmers to modern cryptocurrency transactions, the journey of money reflects human innovation continuously. Humanity constantly searched for easier, faster, safer, and more reliable methods of exchanging value throughout economic history globally always. Ancient communities exchanged goods directly because they lacked advanced monetary systems or organized banking institutions for commercial activity. Later civilizations developed coins and currencies supporting trade across growing empires and expanding international economic networks globally successfully. Banking systems eventually created safer methods for storing wealth and transferring money over long distances between regions securely. Industrial economies depended heavily on banks, paper money, and financial institutions supporting factories, businesses, and expanding urban societies worldwide. Digital technology then transformed finance again by enabling online banking, mobile payments, and instant international financial communication globally. Cryptocurrency introduced entirely new ideas challenging traditional assumptions about governments, banks, and centralized control over money worldwide today. Modern financial systems continue evolving rapidly because technology advances faster than many societies and institutions can fully adapt. Governments, businesses, and consumers constantly debate how future financial systems should balance convenience, security, privacy, and economic stability fairly. The rise of artificial intelligence could further transform financial systems by automating investments, banking services, and economic analysis globally. Future generations may interact with money very differently compared to how people use financial systems and cash today globally. Some experts imagine societies where biometric identification replaces passwords, wallets, and even physical bank cards completely in transactions. Others predict virtual reality economies where digital goods and online services become major forms of economic activity worldwide increasingly. Advanced blockchain systems may create faster, safer, and more transparent financial networks connecting people across international borders instantly. However, every financial innovation also creates risk involving inequality, cybercrime, regulation, surveillance, and technological dependence within societies worldwide. This is why debates about the future of money involve economics, politics, ethics, technology, and personal freedom simultaneously today globally. Financial systems influence nearly every aspect of human life, including business, trade, education, healthcare, and government stability worldwide daily. The way societies manage money often shapes opportunities, social classes, economic growth, and quality of life for populations globally. Understanding money, therefore, helps people understand civilization itself and the systems supporting modern human societies economically and socially. Throughout history, money evolved because human needs, trade networks, and technological capabilities changed continuously over long periods globally. Every new form of money attempted to solve problems created by older systems and growing economic complexity internationally always. Barter solved basic survival needs but struggled supporting large-scale economies and expanding trade between distant civilizations effectively. Commodity money improved exchange systems but still created transportation, storage, and standardization difficulties for traders and societies regularly. Coins introduced trusted value while paper currencies supported larger and more advanced financial systems throughout expanding civilizations globally historically. Banking institutions created security, loans, investment opportunities, and economic stability supporting industrial and commercial development internationally over centuries. Digital finance increased convenience and speed while connecting global economies through internet-based communication and electronic transaction systems worldwide. Cryptocurrency challenged traditional banking structures and introduced decentralized financial concepts powered by blockchain technology and computer networks globally. Today, humanity continues searching for financial systems balancing efficiency, privacy, trust, accessibility, and technological innovation fairly for everyone. The evolution of money, therefore, remains an ongoing story shaped constantly by human creativity, ambition, and economic necessity globally. Money changed from livestock and shells into paper notes, plastic cards, smartphone apps, and decentralized digital currencies over time. Yet the fundamental idea behind money remains deeply connected to trust, cooperation, and economic interaction within human societies globally. People accept money because they believe others will also accept it during future exchanges and financial transactions everywhere. This collective belief allows economies to function smoothly and supports trade between millions of individuals and businesses daily worldwide. Without shared trust and organized systems, financial markets and economic structures would collapse rapidly within modern civilization completely. The future of money may look completely different from today's systems as innovation continues transforming economies and societies globally rapidly. However, money will likely always remain one of the most powerful tools shaping civilization, trade, and human relationships economically worldwide.